Index funds for beginners, the easiest way to build wealth. Want to invest but don't know where to start? What if I told you there's a way to grow your wealth without picking individual stocks, worrying about the market crashes, or spending hours analyzing companies? Sounds too good to be true? Well, that's the power of index funds. In this video, I will break down exactly what index funds are, how they work, and why they are one of the best investments for beginners. Plus, I will show you how to start investing today. Alright, first things first, what exactly is an index fund? An index fund is a type of investment fund that follows or tracks a specific stock market index, like the S&P 500 in the USA, TSX 60 in Canada, Nifty 50 in India, and similar indices for other countries. Instead of picking individual stocks, an index fund holds all the stocks in that index. The indexes I just mentioned are for large corporations in these countries. If you want to invest in a combination of large, medium-sized, and small corporations of your country's stock market, there are indexes for that, like the total stock market index. However, for this video, I will focus on large corporations. For example, an S&P 500 index fund invests in the 500 largest US companies, meaning you own a tiny piece of Apple, Microsoft, Amazon, Google, and hundreds more. Similarly, for Canada, the S&P TSX 60 index is a stock market index of 60 large corporations listed on the Toronto Stock Exchange. You can own a piece of Royal Bank, Shopify, Enbridge, Suncor, Loblaws, and many more. Similarly, the Nifty 50 is an Indian stock market index that represents the float-weighted average of 50 of the largest Indian companies listed on the National Stock Exchange. This index includes pieces of Adani Enterprises, Asian Paints, Axis Bank, Reliance, ONGC, and many more. So why are index funds perfect for beginners? Here are the three main reasons. Number one, diversification. With one investment, you own hundreds or even thousands of companies, reducing your risk. Low fees. Index funds are passive investments, meaning they don't require expensive fund managers. That saves you money. Number three, consistent returns. Historically, the S&P 500 has returned about 8 to 10% per year over the long term. No guessing which stock will win, just ride the market wave. Active versus passive investing. Many investors try to beat the market by picking individual stocks, but research shows that over 90% of professional fund managers fail to beat the index funds over time. So why make investing complicated? Index funds let you passively grow your wealth while focusing on what matters, your life and career. Alright, so you're convinced now. But which index fund should you consider? You cannot directly invest in S&P 500 index. You have to invest through mutual funds or exchange traded funds. The management expense ratio, that is the MER, that is the expenses, are generally cheaper for ETFs or exchange traded funds than the mutual funds. Hence, I will focus on ETFs for this video. If you believe in the US stock market, which is the largest economy of the world, try to find the best ETF from your country in your currency to invest in the S&P 500 index ETF. Here are some of the most popular S&P 500 index ETFs in US dollars, Canadian dollars, and Indian rupees. You can Google it to find the best one for your region. For US dollars, some of the popular ones are Vanguard S&P 500 ETF, ticker symbol VOO, S&P 500 ETF Trust by SPDR with the ticker symbol SPY, iShares Core S&P 500 ETF, ticker symbol IVV, SPDR Portfolio S&P 500 ETF, ticker symbol SPLG. If you're looking into Canadian dollars, some of the popular ones are Vanguard S&P 500 Index ETF, ticker symbol VFV, iShares Core S&P 500 Index ETF, ticker symbol XUS, BMO S&P 500 Index ETF, ticker symbol ZSP. Horizons S&P 500 Index ETF, ticker symbol HXS. For Indian rupees, I have a couple of them. Motilal Oswal S&P 500 Index Fund. The second one is Mirae Asset S&P 500 Top 50 ETF. If you can invest in US dollars from your region or from your country, then you can pick one of the above as I mentioned for US dollars. My message is keep it very simple. So how to start investing in index funds? Getting started is super easy. Here what you need to do. Number one, open a brokerage account. Use platforms like Interactive Brokers, Vanguard, Fidelity, Schwab, or even apps like Robinhood or Webull in USA. For Canada, you can use Wealthsimple, Questrade, Moomoo, Interactive Brokers, or any other discount brokers. In India, Interactive Brokers, Int Money, Zerodha, and others. Whichever brokerage platforms you choose, make sure that the commissions are zero or very minimum. You can reinvest dividends or distributions automatically. You can buy fractional shares. You can link your bank account to the brokerage platform and allow instant transfer of funds from your bank account to the brokerage account with definitely some limitations. Then you choose an index fund. Look for the low-cost broad market index fund ETFs as I explained earlier. Number three, start investing. Invest regularly even with smaller amounts. Even $10 or $100 per month can grow into serious wealth over time. Number four, reinvest dividends and distributions. And number five, keep invested for a long term depending on your unique situation. Remember, the best time to start investing was yesterday. The second best time is today. Few important points for index funds. They are great for all investors. You can start with as little as $10 and timing the market doesn't work. Just stay consistent. Now that you know how powerful and simple index funds are you ready to start investing? Or are you already investing in index funds? Which one is your favorite in that case? Drop a comment below. Please like this video if you found it helpful and subscribe for more investing tips every week. Thank you very much for watching. See you next time. Happy investing.